The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. This is our webinar on the Florida Data Call. It's kind of an overview webinar. I will answer questions at the end, and if you have one that's burning passionately, you can post it during the webinar. We'll do our best to either include it at the end or answer it while we're going. So let's get started. Maybe. Here we go. This is what I hear from everyone when I talk to them about the data call, that it really is going to be a pain. And then they want to know why we are doing this to you. And I don't think it's going to be a royal pain. It's going to be difficult. It's going to take some time to do. And the reason this is being done is to collect enough data to set rates properly. And we're going to, hopefully by the end of the webinar, have convinced you a little bit as to why it really is important for you to participate and why it's important for our industry that you participate in this process. So this is the real reason. It's to make sure that the rates are fair and appropriate. And if they're not, then the government, OIR, Office of Insurance Regulation, is not meeting their duty. And so they have an obligation to make sure that we are charging the correct rates. And you'll see as we go through this why that's really important to us as well. So this is what the Office of Insurance Regulation, which I'm going to call OIR, is obligated to do under the statute. They have to review data every 3 years. And in order to really set the rates, they have to look at insurer data and agent data. Historically, as you know, you have not produced an agent data call. So they've only had part of the information that they need for a long time. So again, our goal is to provide good, accurate, and complete data so OIR can set that fair and appropriate rate. People ask me if this is a new law, and it's not. The law has been around for a long time that OIR is to collect data and to set rates. The problem is that when OIR was split and DFS split regulatory-wise so that the Department of Financial Service is over agents and the Office of Insurance Regulation is over underwriters, when that division occurred, OIR maintained the obligation to collect the data and to report it and to set rates, but they did not maintain the authority to ask you, the agents, to provide that information. So in 2012, the law was fixed so that Office of Insurance Regulation can ask you for the data, and DFS and OIR have the ability to enforce that request for the data. So it's really not a request. It's just mandatory. So the question kind of who, what, when, and where, like we did in journalism school, who is everybody that has a license through Department of Financial Services. All agencies are part of this data call. In every direct shop, in other words, an underwriter's direct closing shop has to produce this same data call that agents have to do. In addition to that, all insurers have a separate data call for their information that they have to produce as well. The only exception are attorney agents, law firms. So if an attorney owns a title agency that's licensed by DFS, they have a duty to report. If they are operating as a lawyer, law firm issuing agent, they do not. And the joke around the table as to why this was done was that we didn't really have confidence that lawyers could do the data call correctly. But the real reason is that as a lawyer, you have a mixed practice. Your expenses cross the boundaries between title insurance and even if you're a real estate lawyer, other real estate matters, like you might be doing plats or filing restrictive covenants or condominiums or other activities that are unrelated to title insurance, and it would be very, very difficult to segregate out what expenses apply just to issuing title insurance. So to get a pure data set, one that we really were comfortable would have accurate information related just to title insurance, the data call was limited to those that hold licenses to produce title policies. So one of the real questions and concerns that everyone had in working through to get the data call approved is who is going to see this information? I think it's fair to say that most of you on the call would not want your competitors to see all the details about your operation, excuse me, that the data call calls for, and you probably don't even want us as underwriters to see it either. So this law is exempt from the public records disclosure. The only thing that's going to be shared outside of the regulators is the aggregate information. So there will be no identifying marks that ABC Title Agency produced a certain set of data. It will be the entire industry's data aggregated together. And so that's the only thing that's going to be released to anyone to review. So no competitors, no underwriters, no press, no one has access to what you produce in the data call directly. So the next question is what? What is being asked of you? And this really is the tough question, and I want to give you a little background as to how we got here before we go into the actual answer to the question. There were a lot of volunteers from the industry, a lot of agents, underwriters, even attorney agents spent literally thousands of hours to work with the regulators to come up with an overview of what they needed to set rates. And so this process was a lot of time spent. There were at least 75 hours with large group meetings discussing the appropriate information to include in the data call. There were formal notices given, public workshops, and an awful lot of time behind the scenes as well. So what we have is a refinement. It is with the input of the industry, and it is certainly not in the nature of some kind of a governmental fiat. It was really a cooperative effort to come up with the minimum that the OIR needed and with the least pain to you as agents in producing it. So you can second guess what was done, but it was done very deliberately with a lot of effort. So here's the what. There's 7 categories of information in 3 schedules that are the data call. So in a very summary fashion, you have historic data, so the data call is going to collect information for 5 years in total. So you'll have real-time data for 2014, and you'll have a very shortened version of the data call for 2013, 2012, 2011, and 2010. And we'll talk about the historical data, and it is right on the spreadsheet for the data call as to what lines are required for that. So the first section is just information about your business, stuff that you probably know right off the top of your head, like what kind of organizational structure do you have? Are you an LLC or a corporation? Who your underwriters are, that type of information. You have 29 lines of that. And then we're going to do statistical information about your title counts, how many orders you have, how many transactions you completed during the year, how many policies you issued, and a breakdown of what kinds of policies you issued, whether they were residential, non-residential, sales, refinances, leaseholds, and so on. And so that's lines 30 through 38. And then on lines 39 through 49, it's a breakdown of your income, where your money came from, and expenses of your business are lines 50 through 82. And then I want you to focus a little bit. I'm going to come back to this as we go through this, but lines 83 through 90 are capturing the losses and claims that you pay as agents. And I am confident that no one, including your underwriters, have an appreciation for what you actually spend to solve problems, albeit most of them will be minor. I didn't collect enough money to record the mortgage and I've got to come up with $8 or something like that. But when they add up in the aggregate, it's not an insignificant amount of money. And it's really, really important that you focus, I think, you focus on this area. Because you are at risk for what you do. You do spend money. And as much as all of us as underwriters want to believe you tell us every time you have a problem and allow us to help you solve it, we all know that's not true. So this is your opportunity to show how much skin you really do have in the game, that you are paying losses and claims, and it really is critical, as you'll see later, in setting the rate and understanding what your exposure is. And the insurer's data call does this very, very well for us. And I know that the majority of claims are paid by the underwriters, but there are times where you spend money, and there are times where your underwriters will ask you to reimburse them, and all that goes in that area. Excuse me again. So then the next is your insurance against losses and claims. That's lines 91 and 92. So you have your E&O policies, you have your bonds that are required by statute. You may have escrow security bonds or cyber theft bonds, or all kinds of new products that are out there to help protect you and the consumer, and this is where we're gathering that information. So then we move on to 3 schedules. A is just a little bit more detail about your business, similar to lines 1 through 29, but drills down a little bit more. B is allocation of labor, costs, and time, which has gotten a lot of attention in our industry, and we're going to talk about that some. And details on the policies, Schedule C, what kinds of policies you've issued and how many, what range of dollar amounts those policies were issued for. And in the case of simultaneous issue, it actually breaks it down by what you're charging for the simultaneous. So there's a lot of detail on Schedule C as well. So that's the what part. We're gonna explore some of that. So here's the why. And if you haven't heard me yet, you will now. So the why is we have to set the rates properly. This is a complex process which includes you, because the insurer's share is 30% more or less of the premium. And while we understand what that 30% is supposed to do, it covers all the risk factors and make sure we're solvent, there's a component of this that deals with you as the agent where your solvency and your return on your investment is relevant, and so we have to gather that data. So here are the factors in setting a rate set by statute. OIR has to consider these things. They look at our loss experience as insurers, prospective loss experience under both closing protection letters and the policies that we issue. They allow for a reasonable margin for underwriting profit and contingencies that we obviously can't predict. Things do happen. And this is where you see that you're relevant to this mix and why it's so important for you to be participating in the data call. And the rates have to be sufficient to allow title insurers, agents, and agencies to earn a rate of return on their capital that will attract and retain adequate investment in the title insurance business and to make it an efficient delivery system. So this is a real critical part of what the rates are supposed to be doing, and there's no way to know the answers to that unless we know what your experience is in the data call. So we also, the OIR has to look at past expenses prospective expenses for the administration and handling of risks, and then everyone's favorite, liability for defalcation. Hopefully no one will ever have this problem again, but we all know that it will happen again. And in Florida, underwriters are liable to a large extent for the misappropriation of funds by their agents, and that is a factor in setting rates. So another quote to remember about our rates is they're not allowed to be excessive or inadequate or unfairly discriminatory. So those are words that the OIR must live by in determining what the rate is, looking at these factors that are set out in that statute. So there's some complication in doing that for OIR. The premium obviously is promulgated, set by OIR by rule actually, but there's also closing services which you negotiate directly, and searching and abstracting which you negotiate also with the users. And these fees are obviously not regulated, but they do affect your ability to survive as a title agency. So they are relevant in that overall mix of what they need to look at. So you're going to be asked for a lot of information about those issues, even though it's not technically part of the rate. So I want to take a look at another statute, and we're calling them buckets. There are three things that you can charge for as an agency, and these are defined in this statute. And so the first one are closing services, and there's a statutory definition of what that means, and it means including but not limited to preparing documents necessary to close, doing the closing, handling the funds and dispersing it that are related to the closing in a real estate transaction, in which title insurance commitment and policy is to be issued. So when you're dealing with a title insurance commitment and policy, you perform the closing, you prepare documents to do that, and you actually disperse the funds. That's what a closing service is, and what you're allowed to charge for. It's unregulated. It's what your market will bear and what you need to survive. So the closing services are defined there. Then I want to go down to premium and skip over primary title services for a second. Premium means the charge, including the charge for performance of primary title services, either by an insurer or by an agent or agency, and incurring the risks incident to the policy. So the premium itself, therefore, includes what the statute defines as primary title services. So let's go back up to that. So the primary title service means determining insurability in accordance with sound underwriting practices based upon an evaluation of the search and other information as may be necessary, determination and clearance of underwriting objections, and requirements to eliminate the risk, preparation and issuance of a title commitment, which sets forth the requirements to insure, and the preparation and issuance of the policy. And so this next sentence is important because it says these services specifically do not include closing services, which are defined above, or title searches, and you're allowed to charge separately for those two other items. So the three things you're allowed to charge for are closing services, the premium, and title searches. That's it. Those are the three things statute allows you to charge for, and the data call is going to be collecting information about. So OIR has a duty to set the rate that assures an efficient title insurance delivery system. It has to look at all the revenues and costs. And so that's why we're asking for closing service information, searches information, in addition to premium. But it also has to be able to separate out the items that are paid for by the premium versus your closing service and search charges. So you will see that as you go through the data call, that division of what function you're doing at any given moment. And again, I'm going to keep this mantra is that the rates cannot be excessive, cannot be inadequate, and cannot unfairly discriminate. So what next? So what happens when you've done this data call? The first one you're going to do is in 2015 for 2014 and the 4 years before it's data. So sometime in 2015, OIR gets all of your information and has to do stuff with it. They're going to compile it, put it in a form to analyze. Once they have that compiled unidentifiable data, that consolidated data will be then released for review and analysis. I know for a fact OIR will be analyzing it thoroughly, as will the FLTA, and likely your underwriters as well will have a look at this. I would expect you as agents to want to see what's going on in total, and then there will be a lot of discussion back and forth between the regulators and the industry. Eventually rates will be proposed, and then there will be notices and public hearings and draft rules to adopt the rates, and further opportunity for input and discussion. So the moral of that story is that at the end of 2014, there will not be an instantaneous transition to new rates. It's going to take a lot of time and effort to compile and analyze this data and come up with a new rate. Then once that proposed rate is determined, it will have to go through the rulemaking and approval process. So we're talking sometime down the road. I'm not real sure how long it's going to take until we get there, but it probably won't be any time in 2015. It would be more like 2016 before a rate change would occur. But in the meantime, you'll be doing this data call every year. So there'll be continuing process of collecting data, analyzing it, and moving forward. So every 3 years from the date that we set that they review this information, the rates will be reviewed again by OIR. So the big question, will they go up or down? Here I am, in case you didn't know what I look like. This is my normal office attire, and unfortunately, my crystal ball is a little foggy on this, and I have no idea what's going to happen. So it'll either go up or it'll go down. Very unlikely, in my opinion, that it'll stay exactly the same. The idea that after all these years of the same rate, it turns out that it's perfect is fairly remote, I think. So it will change. That much I do know. I just don't know which direction. So let's do a little bit of a recap, and then we're going to go through some more detail and open it up for questions. So all Florida licensed title agencies and every direct shop in Florida participates in this data call. There's 7 categories and 3 schedules in the data call, and each obviously has its own detail. You're going to start in January 1st, 2014. Hopefully you've already been thinking about it. And you're going to report this first data call in 2015. It's going to include data in a limited fashion for the 4 years prior to 2014. And the reason we're doing this is to provide the necessary information to set proper rates. And I joke here, what happens if you don't do it, you don't really want to find out if you don't file this. But the answer is DFS and OIR have the power to suspend your license or to revoke it if you fail to comply and submit this. So this has teeth. They really need this information, as does the industry, and so it will be taken seriously. I do realize a few years back there was a voluntary data call to agents that wasn't met with a lot of excitement. This data call is not voluntary. It is mandatory. So do take it seriously. So when we deal with the historic data, here's what we're looking for in the past 4 years. If you have more, information you want to share. No one will be upset if you provide more. But this is the minimum. You have to do these things. So out of the overall data call, these lines are the only ones you need to worry about for your historic time periods. So lines 1 through 29, which is just your basic entity information, who your underwriters are, how many employees you have, that type of information. Line 45 is investment income. If you are fortunate enough to have investments as a title agency, you're reporting how much money you made from those investments. Line 49 is gross revenue. It's how much money you brought in from whatever source, whether it was searches or closings or title premium. Line 50 is employee compensation. You do not need to drill down with the detail that's on the full data cost, just how much money did I spend. And line 52 are dividends. If you're a corporation that pays dividends to your owners, then you'll report it there. Line 56, employee benefits, whatever you've spent, like retirement accounts or health insurance or life insurance for your employees, you would enter there. Line 57, what it costs you for your occupancy of your building, rent, goes there. Line 58, if you own your real estate, you'll show your depreciation there. Line 65, you have other assets like your computers or cars or whatever it is that are business assets that you're taking depreciation for, you would put on line 65. Line 71 is your marketing and advertising expenses. And line 82 is just the total of all your expenses, including all those other lines we just filled out, but the total dollar amount. So that way one could look at this and determine your profitability overall. And it gives specific information about certain issues that were identified as important historically. So all of this should be fairly readily available from your tax returns those years or your other just general corporate records. It should not be a big burden. If you happen to have policy counts and you can fill out the schedules for those prior years, OIR will be pleased. You may do that. There's no limitation on how much you want to do, but this is the minimum that you have to do. I want to take a look at one of the paragraphs from the Schedule B on labor allocation. We have separate webinars on how to approach this. There are all kinds of alternatives on how you can do this, but there are five categories with Roman numerals. This is one of them. It's Roman numeral 3. Determination of insurability, which is the subject of this category, and the information is the total of what your employees have done for this category. There are subparagraphs, A through F, that are there to give you ideas of what information OIR is looking for. So as examples, ordering and evaluating the survey is part of the determination of insurability. Ordering lien and mortgage payoff inquiries is part of that determination of insurability, as is evaluating other types of liens or covenants and restrictions, looking at judgments that need to be dealt with, and other legal proceedings like a foreclosure or a tenant eviction or any number of different lawsuits. So all those things are part of the determination of insurability, but they're certainly not the exclusive list of everything that you could possibly do that would be determining insurability. But do read through all 5 and take a look at the examples to see how to segregate your time. But at the end of the day, when you do your data call report in 2015, you're only going to be filling out lines for Roman numeral 1 through 5. The subparagraphs A through whatever are not necessary to have any input. They're just there as suggestions for you. So don't it looks worse, in other words, than it is. You don't have to keep records at that detail level. So how do you capture the labor allocation? There are a number of ways. I think initially the reaction of most folks that were working on this was, wouldn't it be great if everyone kept an accurate real-time record of what they did? And so if lawyers, we used a program called Time Slips, and we would input that data into this program so that we could generate a bill at the end of the month. A number of us commented in public hearings and in some of the workshops that this was probably not going to happen properly for everyone in the industry. Some certainly will embrace this and do this, but I can tell you as an absolute fact that when I was being paid my fees, I was going to say something characterizing my fees, but when I was paid my fees as an attorney, based solely upon me writing that time down into time slips. It was a computer program. All I had to do is keep it up on my desktop and enter the time. I didn't do a very good job with that. And I literally lost thousands of dollars a year because I just didn't keep my time. And so my partners were not pleased with me. Of course, they weren't any better than I was. But that's a real problem when you think about it. I had a lot of motivation to write that time down because for every hour somebody wrote me a check for hundreds of dollars. That's not the case here. So if you're keeping time records, your employees are not compensated by those time slips, nor are you. So your motivation is even less than mine. And since I was really lousy at it, even when I had the motivation, there's no real, it's hard to expect you to be able to do this in real time, although that is the perfect solution. Some of your software can capture some of your time and report that, I'm confident. Even a program like QuickBooks has some timekeeping possibilities. One of the FLTA members, agents, has created a software system that I'm sure is really, really excellent at this, and it's available for purchase. And then because we were concerned about the ability to provide accurate data based upon real-time capture, an ability to estimate your time was added, and you'll see that in the data call. So if you have a reasonable method to estimate your time on the 5 different categories, then you may utilize that as well. So there are lots of options. I encourage you to listen to the other webinars that are available on it. I imagine you'll hear a lot more about it as we proceed through the year. So then in Schedule C and in the data call itself, you're going to be maintaining policy counts, what types of policies you've issued and how many. And on Schedule C, you actually have a breakdown of which liability category each policy is. So you have 5 policies from 1 to 50,000 or whatever. I don't have to memorize the schedule. And then you might have 10 at a different level. And so you'll keep those records. And when you get down to simultaneous issue, it's based upon your charges for that, whether you charge 25 or 250 or 500 or whatever. You're going to break down by dollar amount of the liability charge on Schedule C. I've been told that I'm an old person because I talk about hard copies, so ignore the first one. No one needs to do that. Your computer systems will keep that record for you if that's helpful. These are totally just suggestions as possibilities for what you might be able to do to deal with the policy counts. You can check your existing computer programs to see if you have something within them that will generate the information you need. You could also create a post-closing process or to share that information internally. There are all kinds of different options on how you do that, but you'll have to do it. And you could create it all at the end of the year if you want to, or you can keep it in real time. That's up to you. So in income and expense tracking, our recommendation is that you change your accounting system's chart of accounts to match the data call categories. You can do what you need to with them for your tax categories behind the scenes, but if you set up a new item that matches the data call, and then when you do your bookkeeping, it's entered into that, it'll be a lot more simple for you to transfer that data to the data call form. If you have things that are partially paid from a trust account through the closing, reimbursing you as the provider of a service or an expense item that you've incurred, be really careful how you keep those records. And obviously, we don't want to have any commingling of accounts, but we all know that we don't do that. So to wrap up, the data call is absolutely necessary for us to succeed as an industry, and everyone involved, including the regulators, know it's a lot of work. We at FLTA are working with OIR on the frequently asked questions. This is the website, www.flta.org/ready_data_call. You can access that whether you're a member of FLTA or not. You can pose questions there. And so you know what happens when you pose a question on the FAQs. Our executive director, Alex, and a group of us, including me, sometimes will talk about this, and then Alex will go to OIR and have dialogue and end up with the answer, and that answer is posted. So the answer is not FLTA's best guess. It is the answer that's been generated through dialogue with the regulators. So it is as good an answer as we're going to have to those questions. FLTA will continue to help you through with this data call. There will be forums for managers and your accounting staff to help you implement this if you're a member. There are existing checklists and other resources that will help you with this process. Those are available if you're a member of FLTA. And I do know for a fact that at least some of your underwriters are helping or working on help for this, and will be doing things throughout the year to help you along with this process. So that's the webinar. If you have questions, we can deal with those. And I do have one audience question here. It says you're a Kentucky company, only a bit of your work is in Florida, and you are only including Florida transactions. So no Kentucky data, just Florida. And that was the answer that you were given, but that is the answer.
Well, Jeff, it doesn't look like we have any other questions.
Sweet.